Jonathan, the last time they reported, they beat consensus estimates by what, 11.1%? So what are we expecting this time?
Right. So we're expecting about EPS of 1.72. But at CFRA, we have a bit more of an optimistic outlook. But really, right now, investors are valuing this company looking towards 2026 and beyond. So the growth story is looking ahead. So I'd say even more important whether they beat earnings or not, it's going to really be about what are margins going to look like next year. And any indication of that was likely to move the stock more than what they did the previous quarter.
All right. Now, they've become a big player in powering AI data centers, but a lot of people think the demand story may be getting ahead of itself. So how real and lasting do you think this surge in power demand from AI may actually be?
So right now, the U.S. Energy Information Administration is forecasting a 2% increase in electricity demand for this year and a 3% next year. Doesn't sound crazy, but keep in mind, this is built on already record levels. So the story is here, it's real, but that's a great point. And it's the reason why we downgraded from a buy to a hold back in the summer. So we love the growth story, but it does seem like it's a bit ahead of itself. When we downgraded, it was trading at almost 70 times forward price to earnings. There is a point where the growth narrative is priced into the shares. But a lot of it's depending on whether they're able to actually execute on this demand, right? There's two parts of the story. They can get a lot of orders for their large scale gas turbines, but are they able to ship it based on where expectations are? Margins are not going to get where investors are expecting if they're not able to convert backlog into sales and earnings.
And you still maintain that hold rating at this point, correct?
Still maintain a hold. We think we're in a bit of a wait and see pattern. We have to see a bit more progress on its restructuring, a bit more progress on expanding capacity. So there just needs to be a bit more evidence pointing towards their ability to execute on this demand before we can say, all right, there's more room to go ahead.
Before I talk more about what's happening with AI, I want to put into context that electric growth 2-3% a year. Put that into context. Does the United States usually grow at that kind of percentage, or is it much less?
No, this is a very unique time. Really, electricity demand plateaued and stagnated in the late 2000s. So almost 2 decades, it was essentially flat. And even with increase or growth in the economy, there were some energy efficiencies and technology that really kept a cap on that. So what we're seeing now is really a step change in demand for electricity, and largely driven by data centers. There's also a bit of that reshoring of advanced semiconductor manufacturing. But at CFRA, we would argue primarily data centers, very, very power hungry.
All right. So management hinted that orders could slow this quarter, but some analysts think pricing strength and new turbine contracts could surprise to the upside. What's your take? Or is this just timing noise? Are we still underestimating how much pricing power the company really has?
Pricing power is significant. It's a large reason why it's coming out of a sub 10% EBITDA margin business. Now it's on the trajectory, it's headed towards the mid-teens, we think by next year. But that pricing power is in lockstep with backlog. A lot of those higher margins, higher pricing is baked into the backlog because they're able to push through pricing, but at a bit of a lag, right? They can take in a new order, say, okay, it's for this price, but they still have to ship those older, more stale backlogs that might not represent the latest pricing. So really, it's all depending on their ability to execute these shipments.
They had a couple of announcements over the past 6 months, major wind turbine order in Romania, decarbonization roadmap for the United Arab Emirates. Are we expecting any kind of surprises in their announcements during the earnings call?
I'd say if we focus on wind, it's really not what's behind the steering wheel, so to speak, of the current multiple it's trading at. Really, the growth is locked and centralized around their power business and electrification. Electrification being their utilities infrastructure side of the business, and then power is really focused on those gas turbines specifically. So I think wind is a bit of a swing factor here, but it's not going to be what's going to drive this company, say, meaningfully higher or lower in our view. It's not a majority of their sales or EBITDA. And as far as any unique surprises, nothing really, except where are they at in their stage of improving their margins and really their outlook. That's going to be a key focus for investors, and whether you see downgrades or upgrades.
Can you update us too on, they announced that they were going to acquire, I might mispronounce the company, but Altea, SAS, they're going to supercharge their Grid OS platform. Where do we stand on that? And is that a definite thumbs up from analysts?
Thumbs up. I think it is a very prudent addition to their electrification portfolio. Really, we're going to see how their abilities to generate synergies, that's going to be key, a part of their kind of getting behind more, kind of spreading their blanket of this opportunity and capturing the growth from investment in electric infrastructure. We still have the IIJA at play, right? It was frozen temporarily by Trump, but there's still a very significant need for additional investment in the U.S. electrical grid infrastructure. It's not as resilient as it could be. It is still aging quite significantly and has been underinvested for decades. So I think it's very smart for GE Vernova to get behind this a bit more.
I think you've just answered the next question I want to ask you. Let's assume that the people saying that we're in an AI bubble when it comes to AI stock, let's assume that's correct. Let's assume that bubble pops. It would seem to me, correct me if I'm wrong, that GE Verona, I always pronounce it incorrectly, would be sustainable despite an AI bubble pop. What's your take on that?
Yes. So the backlog extends towards the end of the decade. So it's one of the reasons why you might see that higher multiple is there's just more visibility. There's a pretty clear path towards the question is timing, right? That's the only issue is like, are they going to be able to realize this growth as fast as we're expecting? But it's pretty clear. That's one of the benefits of these extended order backlogs going back towards 2028, close to 2030 now. So really, even if there's a short-term pop of the bubble or some deflation of the sentiment, that those backlogs are pretty locked in. These are part of long-term capital allocation plans, so they don't come and go so quickly.
Even if there were a bubble to pop, would the growth rate of demand for electricity continue at the 2 to 3% rate, or would that fall?
So it could, I'd say longer term, it could come down a bit. There might be a little bit less bullishness on that. But the reshoring trend, it is happening. It has kind of cooled a little bit off of very high levels. But like if you look at non-residential construction spending, the largest single category is manufacturing construction. A lot of that's reshoring. It's not just due to tariffs. This has been going on coming out of COVID. So there really is a very clear, with hard data pointing towards manufacturing coming to the United States. It takes a long time for these facilities to be built out, which maybe is why you're seeing a little bit of a malaise in the labor force there. But I think there still are, the projects underway are unlikely just to be canceled. I think maybe some longer term planning might be changed, but in the near term, I think this year and next year, more or less, those rates are set to go through.
So as we wrap up, I want to re-ask something you mentioned at the top. Why have a hold rating on this stock, given what you've just said about the potential for the outlook, despite some headwinds that may be coming at them?
There are risks, certainly, as far as execution on realizing those restructuring costs, on realizing they're executing that backlog conversion rates. But the growth story is very visible. It's very clear. And really, we're just looking for a bit more as far as certainty in that outlook. We think, but the hold rating is implying that it can grow along with the market. But as far as outperformance, there's a little bit less margin of safety, right? So there just needs to be a bit more clarity on the margin progression because that's really underpinning where these earnings assumptions are going. So we need to focus on margins and just need a bit more clarity on that and how that trajectory is coming to fruition.